All right, welcome to the deep dive. Our whole mission here is to take these really critical corporate developments, cut through all the noise.
To get to the core of it.
Exactly. To distill the actionable insight, you need to understand the big shifts that are happening right now. And today, we are looking at a massive strategic commitment from Tembo Global Industries. This is a move that's, it's completely redefining the company.
It really is. And this is such a textbook example of a corporate pivot that aligns perfectly with, national policy.
The self-reliance goals.
Exactly. Tembo Global, through its subsidiary, has just secured a defense manufacturing license. And you have to understand, this isn't just a piece of paper. It's the green light on a huge transformation from an engineering and textiles company into a real player in India's defense ecosystem.
Specifically targeting Atmanirbhar Bharat.
Precisely. So we're here to unpack all the complexity, look at the financials of this massive bet, and figure out what a 1,000-crore commitment actually means.
That 1,000-crore figure, that's what makes it so compelling. To put that into perspective for you, 1,000 crores is roughly, about 120 million US dollars?
Around that, yes.
And they're placing that bet on a company whose total revenue last year was only 743 crores.
It's a giant leap of faith.
It absolutely is.
And the market saw it that way, too. It responded immediately. Let's start with the trigger event. So on January 2nd, 2026, Tembo Global announces that its subsidiary, Tembo Classic Engineering Private Limited.
Which used to be called Tembo Defense Products, right?
Yep, that's the one. They announced they'd successfully received their defense manufacturing license from the government of Maharashtra.
And the market reaction? It was just instantaneous.
Oh, absolutely.
Shares of Tembo Global were locked in a 5% upper circuit on the NSE. They were trading at 607.75. When you see that kind of move, it just tells you the market thinks this license was the single highest hurdle they had to clear.
Precisely. That license gives them the authority to actually operate. It means they can go ahead and establish their small arms manufacturing facility. They're planning to make specialized small arms and ammunition, and they're using European technology to do it.
Which plugs them right into the whole Make in India and Atmanirbhar Bharat initiatives.
Right. And for anyone not familiar, Atmanirbhar Bharat is essentially a policy framework to really push domestic production.
Especially in strategic sectors like defense.
Exactly. The goal is to cut down on India's historical dependence on foreign military imports. So by getting this license, Tembo is basically signing up to be one of the architects of that new indigenous supply chain.
It's just extraordinary when you look at where they came from. Tembo Global was incorporated in 2010. It was originally called Saikath Exim. And for most of its life, its core business was making engineered metal products, pike supports, fasteners, HVAC parts.
And a big trading business in industrial textiles.
Right, a traditional industrial supplier.
And they were built for the global market, not so much the domestic one. An export champion.
For years, something like 80 to 85% of their manufactured goods went to the Gulf, Europe, and the US.
But then around 2022, 2023, management clearly saw a ceiling. The growth and the margins in that traditional business were topping out.
And that's what sparked this huge diversification push. They didn't just dip their toe in the water. They jumped into 3 high-growth areas at once.
Right. EPC, that's engineering, procurement, and construction solar power. And the most ambitious one, defense.
It's a huge pivot away from that lower-margin legacy textile business.
And that pivot is critical context. The textile division, it still generated 141 crores in the first quarter of fiscal 26, but it's a high-volume, thin-margin, very competitive space.
So the move to defense and EPC, it's a conscious choice.
It's a very conscious pivot toward businesses with higher barriers to entry and, crucially, higher margin potential.
Let's talk about the timeline for this defense project, because it shows some serious political will behind it.
It does.
The formal groundwork was laid pretty early. They signed an MOU with the government of Maharashtra at the World Economic Forum in Davos.
Back in January 2025.
And this wasn't some small pilot project. That commitment was for 1,000 crores in capex.
And we know the physical plan. The Maharashtra Industrial Development Corporation, MIDC, is allocating 100 acres in Amravati for this. And the plan is very specific. Separate facilities for making the guns, the small arms, and another for the ammunition.
Which are often completely different regulatory and technical challenges.
Absolutely.
Okay, now here is where it gets really interesting for me. This is where Tembo has, I think, brilliantly de-risked the whole thing.
Foreign collaboration.
Yes. They're using top-tier European technology, but the key is the 100% buyback arrangement they've set up.
This is the genius part of the initial strategy. Their European technology partner has committed to buying 100% of the production output for a set period.
Think about what that means for you as an investor.
Right. India's domestic defense procurement cycle is notoriously slow. It can be 6 months, 12 months.
Or even 2 years, full of testing, political approvals.
So by focusing entirely on a guaranteed, stable, global export market at the start, Tembo has just sidestepped the biggest problem that sinks new domestic defense companies.
That guaranteed sales floor is an incredible buffer.
Yeah.
But let me just challenge that for a second.
Go for it.
If the whole point of the government's push is Atmanirbhar Bharat self-reliance, isn't a 100% export deal a bit contradictory?
That is a legitimate counterpoint. And in the short term, yes, you could say it's a contradiction, but strategically, the government's playing a longer game here.
Okay.
They allow the export model because it validates the quality of the product on a global stage. It ensures the plant gets up to scale faster, and it brings in foreign currency. Once the facility is stable and proven, then the Domestic Defense Ministry can start integrating Tembo's production into the Indian supply chain, knowing it's already met global standards.
So it's risk mitigation first, self-reliance second. That completely reframes the strategy. It's not just about what they're making, but how they're proving it out. Which brings us to funding. To pull this off, they need serious cash. So what do the Q1 financials for fiscal 26 tell us about their ability to fund this?
The financials show a company that's already got a lot of momentum. Revenue grew 93.2% year over year. That's up to 248.1 crores.
And that's mostly driven by their old divisions, engineering and textiles.
Right, but the real story is on the bottom line, the profitability.
Yeah, the profitability surged. It suggests huge operational leverage. Profit after tax, or PAT, jumped an incredible 252.6% year over year to 19 crores.
A 250% PAT surge.
That tells you they are already finding ways to squeeze out better margins, even in their legacy businesses.
Absolutely. This pushed their PAT margin up to 7.7%. That's an increase of 346 basis points. The EBITDA margin is a healthy 11.4%.
And that kind of performance is vital, right? It provides the cash flow and the equity cushion they need to go out and get the rest of the financing for that 1,000 crore project.
For sure. And their near-term visibility looks really strong, which should give investors confidence.
Their confirmed order book is at what, about 1,350 crores?
And on top of that, they have an L1 order bidding pipeline worth another 2,000 crores.
And for anyone who doesn't know, L1 bidder means they're the lowest qualified bidder. So it's highly probable those orders will convert.
So you combine those and you get a pipeline of 3,350 crores. That's years of revenue visibility for the traditional business.
So the old business is healthy enough to fund the birth of the new business, which brings us back to that huge shift.
Yeah.
By fiscal 27, what does the new Tembo actually look like?
It looks tectonic, a complete reshaping. Right now, textiles are about 61% of revenue. By FY27, management projects that will be slashed down to just 10%.
Wow.
Engineering should stabilize around 60%. But the new businesses, defense and solar, they're projected to contribute 30% combined.
With defense taking the lion's share of that.
Yep, defense at 20% of total revenue and solar at 10%. It's a total pivot to high-value sectors.
Okay, but we have to talk about execution risk.
Of course.
Is Tembo biting off more than it can chew with a 1,000 crore investment that's bigger than its entire last year of revenue?
That is the number one concern for anyone watching this. The sheer size of the capex is the risk, but you have to balance that against the mitigating factors.
So what should investors be watching?
3 things. First, regulatory approvals. The main license is done, but there are others. Second, project funding. They've already secured loans for about 609 crores, so they're more than halfway there.
That helps.
And third, the timeline. Getting the defense unit commissioned by FY27 is ambitious. So it's a risk, but it's a calculated and I'd say a de-risked ambition.
That calculated risk brings us to our final segment.
And before we go any further, the usual disclaimer. Everything we discuss here is for educational purposes only.
Yes, this is not investment advice. Please do your own due diligence.
Absolutely.
Okay, but if we were pitching an idea here, the outrageous but plausible trade would be this. Go long Tembo Global Industries, based purely on the structural arbitrage that's created by that guaranteed sales contract.
I like it. It's a high conviction thesis. It all hinges on that 100% buyback clause.
Think of it this way. The market is still pricing Tembo like it's a traditional industrial manufacturing company.
based on the volatility and lower multiples of their engineering and textile businesses.
Right. But management is about to drop in a brand new bulletproof engine, the defense facility. And that engine already has a guaranteed buyer lined up for everything it produces.
So the argument is that the market is undervaluing this incredibly predictable, high multiple revenue stream.
Exactly. They're still applying a mid-teens PE ratio. But defense manufacturing is a higher margin business. If they hit that 20% revenue target in FY27, that guaranteed sales stream should force a massive re-rating of the company's valuation.
And you'd expect its multiple to climb closer to its defense peers.
Which trade at what, 25x to 45x PE? That guaranteed contract essentially guarantees high multiple revenue. The arbitrage should close pretty quickly once that facility's up and running.
It's a strong thesis. It shifts the entire focus from sales risk to pure execution speed.
So what does this all mean for you? The key takeaway here is that Tembo Global is in the middle of a complex, government-backed transformation. They are successfully moving from a traditional industrial company to a diversified defense and power player. And this defense manufacturing license is the final green light for the most ambitious part of that plan.
And the immediate success, it all comes down to that unique international export clause.
Yeah.
They've got the license, they've got most of the funding, and they've got the market.
Right.
So the core question now, the one that determines if they hit that FY27 target, is just logistical. How quickly can they scale production across that 100-acre facility to meet that 100% export demand?
That's the only variable left, rapid scaling. Thank you for diving into the strategy with us. We invite you to look deeper into the changing revenue mix of other industrial players making these kinds of massive pivots. We'll talk to you next time.